Hello and welcome. This is Brandon Wendell, Chartered Market Technician, and I'm going to do some analysis on the U.S. Equity Index Futures. You got the Christmas holiday here, so we closed a little bit early this week. I'm actually doing this on Friday the 24th, Christmas Eve, so Merry Christmas everybody after you watch this video. And of course, looking forward to the new year to be hopefully prosperous for us. And anyway, we're going to kick this off taking a look at a comparison chart here from the lows from the 27th of September. You can see that the rally was brought on and led primarily from the NASDAQ. And when the NASDAQ, didn't really find weakness, but you can see the Russell fell first. And the Russell has signaled a bottom. So with the Russell putting in some higher lows and higher highs and getting bullish now, it's actually leading us to the upside off of the December 16th lows that we have. So if I go down to a daily chart here and we go to the 16th of December, actually we'll do this correctly. There we are, 16th of December. You can see that the Russell is the leader to the upside, currently up about 4% from that area, while the Dow is just barely eking out a positive. So this is our so-called Christmas rally, I suppose. It's not really showing itself too strong, but we can jump over now to take a look at the Russell to see what that leading index is telling us about where the markets are likely to go. So we'll go RTY H 2021. Nope, sorry, RTY H 2022. And on the weekly chart, we don't get a whole lot of data, so really it's better to just go with the continuous contract here on the weekly chart. So we've done that obviously before, and you can see that we're pretty sideways overall. We had a false breakout of the range that we were in, and unfortunately it came right back into the bottom of the range there. That's usually what happens when you get a false breakout. You usually snap back in and go to the opposite side of the range, which you can see really is this low right around 2100, with the top of the range being about 23 and a half roughly. So we're stuck in this range going back and forth. Sorry about the vibration of my phone there. Let me put that on silent. Anyway, never ends. So there we go. But basically what's happening with this Russell right now is we still don't have a lot of momentum. There we go. Even though we came down to the bottom, we did not go into bearish territory. So the fact that we didn't go into bearish territory tells us that we're likely to see a more bullish momentum. And we did break out. We did go into bullish territory. So underlying bullishness is still prevalent here in the weekly chart of the Russell. If I go down to the daily time frame, and I'll get rid of that range that we're in, we do see, no, there's not really much of a supply here. I would say the nearest supply zone might be a little bit higher on the daily chart, so we've got some room to go until we reach this little drop area at about 23.28 to 23.72, and well, we had a positive divergence leading off the low. So again, that's showing some bullishness in price, where prices made new lows, but as you can see, the indicator failed to do so. It made higher lows, which is bullish when it comes to the price action. There you go. So that preceded this rally that we just are currently in. It doesn't look like this rally is going to terminate in this area. It could. We can look at a 4-hour time frame and see if there's any sort of supply there. I'll go to the actual contract now to get a little bit more detail. And again, we'll go down to the 240. And you can see we've got a nice bullish momentum coming, but here is some weakness being shown. As we're moving up, we're continuously making some new highs here, but notice the indicator is starting to flatten out a little bit, which means momentum, it's still there, it's still going up, but it is slowing down just a bit, and that's indicative by the candle color changing too. When you start seeing mixed red and green, that tells you that the trend is getting a little bit weak. So looking a little left here, we want to see, is there a top being put in by supply? And it doesn't seem to be. You can see in this area, we really don't have a good supply zone. Yes, there's some selling pressure that began, but the structure is not correct for showing us that the institutions were selling there. Going a little bit higher, this is where it is. There's your supply. You've got drop-based drop right around 23.32, which is just shy of the top of the range that we were in. Remember, the weekly range topped out around 23.60. So we're close to the upper end of that range, and that's where you would expect to see some selling pressure coming in. Going back to the daily chart for a moment, and go into the hard right edge here. Yeah, we don't have any kind of retracement or anything to measure, so I'm not sure for Fibonacci extensions, but this also is a drop-based drop supply zone as well on the daily. So if we were widening this for the daily zone, and you could go one, it's only one basing candle, so you could go wick to wick, or If you didn't, again, you're looking around 23 and a quarter to 23 and a half roughly for that overhead supply zone. So I say that this week we should still have some bullish momentum carrying us up to that area, over 100 points to, well, actually about 100 points to the upside on the Russell. That's what it looks like, right? So it looks as though we're still going to be climbing here in price. And as we go down to the, it's really unusual. I mean, I don't see, fundamentally, there's no reason for us to be this high. You know, the economy's not that strong. There's no reason for it to happen, but it just keeps happening. The Federal Reserve keeps bailing us out, and things are better in the market than had been expected. So immediately, though, as we reopen on Sunday, we may see some weakness. And I say that because on the hourly chart here, we have a huge divergence. Prices were making a much higher high. As you can see, the momentum has died off on that second peak. So we started selling off already. We may continue to pull back. We don't have a demand zone right here. The first demand zone we see is down here. So we may get a pullback into that 2216, 2202 area. It's kind of wide compared to the rally out as well. So not really the best looking zone, but you know, there might be something in there on a 15-minute chart that we can fine tune for a possible bounce. I would look to see as we pull back, if we do not go below 40 on the RSI or even 50, then you would expect a rally to come very, very soon. So we're still seeing some underlying strength in this market. Doesn't look like it's done yet in climbing, and does look like it should continue to go up. I'll drop down to the 15 just for kicks. And again, this is okay as a demand on the 15. You've got drop, 1, 2, 3 basing candles. There's your rally with follow through. So you might get a little pause here at 22.28. Actually, let's go back to the 60 for a moment. And what I want to do is see if there's a retracement value there. I think on the last move up, that's going to be about a 68% retracement. Nope, 78.6 at the top of the zone, but if I go wick to wick, yeah, it's roughly 61.8. That's what I was thinking. So we'll see if that happens. Oops, I'm going to clean this up a little bit. There we go. So again, going down to the 15-minute time frame, I expect a bit of a pullback. Might get a bounce here at 22.28. The key thing will be as we come into that area of demand on the 15-minute chart, if we're below 40, expect us to continue to move down into this area, which was inside of our higher time frame demand. That's the stronger zone anyway, and that's at 22.14. So if we do pull back into 22.28, but again, the RSI is below 40, we should keep going down and then bounce at 22.14, probably with a divergence, meaning we'll go below 40, then bounce, and then come back down, but not move as low on the RSI. So that's kind of dictating the market direction. Let's go out to the S&P. And I'll go out to the weekly chart first, just to get an idea of what's going on here. We have a huge divergence on the major market here. You can see on the weekly chart, prices trying to make new highs, while the indicator's saying, nah, I don't think so. So we've got a lot of weakness as we're trying to move up. We're really just moving sideways as well. Down to the daily chart. Oh, by the way, before I go there, on the weekly, no demand here, although there is lots of buying pressure that comes out of that area. I'd be shocked if we cruise through that 4,400 area. So going to the daily, clean this up. You can see we've got an issue with price action. We keep making highs. And every time we make a high, we get a pretty deep retracement on the daily chart. And it's been getting deeper and deeper and deeper, right? And this kind of lends into what's going to happen next when I go to my 4-hour chart. We're seeing what's called a broadening formation, or some people call it an inverted triangle. So actually, let's change the color of that back to the purple. Shows up better. You can see there was a deep retracement. This one was deeper. And this one was even deeper. So if we keep coming up, we may see a deeper retracement. All this is being told to us that we're not able to break out because you can see we can't get above 60 on the RSI. We don't have enough bullish momentum to carry us upwards out of this sideways basing that we've been doing, but we're making fresh lows. So the big question will be, when we reach the top of the broadening formation, if we start to turn to the downside, are we above or below 60? If we're above 60, that's the breakout. If we're below 60 here on the daily time frame, then we're likely to see a much deeper pullback that could take us below 4,500. So that's what I'm watching for right now. If I draw the lines across these highs and extend outwards, before that happens, we still have a lot of room to go to the upside. As a matter of fact, on the current trajectory that we're seeing, if price continues to move up like this, we're going to go up to about 47.87, just shy of 4,800 before we start turning down, because that's what we're aiming for right now on that broadening formation. So let me get rid of these and just draw in that broadening formation. Again, it's like an inverted triangle. Instead of getting narrow, it's getting wider. So again, I can draw the lows, connect. There you go. So there it is. So that's suggesting this should be our move up. You know, you see how steep we're moving up right now. If that continues, that's where we meet up, right around 47.84. And if the RSI is still below 60, then we should see a massive drop that'll take us below 4,400, most likely. If not, if we're above 60, then this could be the breakout we're waiting for. So we'll have to wait and see. Again, I can't imagine that it wants to. I don't understand this. The market should not be this high, but it just is. So you can't argue with it. You know, you got to follow what the market's telling you to do. That's it. We don't invent. We discover what the market's telling us. So again, we're kind of meeting up right in that 47.80 area. If we're continuing on this current move to the upside, that's our broadening. You can see it a little bit better here on the. Let me see if I can do this right. I think it's there. There we go. Yeah, there's the broadening formation again. And it's a little off. There you go. Again, you can see the peaks are actually making it above 60 here, but that doesn't matter. On the daily, it wasn't. But there we go with our formation. And again, the intersection is right in the neighborhood of 47.80, 47.90 before we turn down. On the 4-hour chart, we got lots of bullish activity, so we're likely to keep going. There's nothing to really hold us down here as far as overhead supply. You know, there's really nothing there. So there's, you know, we may take a little breather here and there, but overall, you got to be bullish with the market. It's telling you to go up, you go up. It tells you to go down, you go down. So we've got a high here of 46.90.50. Let's see, the close 91. So that closes above. We've got maybe a little zone right here on the 4-hour. I say maybe because it's not a great formation. The better demand zone is down here. Rally, base, rally. But there is rally, base, and there I'd have to use the leg out candle as the bottom zone. But good buying pressure coming out of those areas. I'd watch for pullback. If we do get a pullback, it should bounce at one of those areas. That would obviously break that trend we were in and kind of slow it down, which could elongate this broadening move, and maybe we meet up around 4,800 instead of 47.80, 47.90. Going to the 60-minute time frame, still seeing a little bit of strength here, but we stalled out. Notice the RSI is not giving us the same heights that we should be seeing as we are with price. We're getting a little bit lower highs there. That's a negative divergence, suggesting we might get a little pullback coming in on Sunday evening, Monday morning. If we do, well, just maybe come to that 4-hour area. I don't really see much difference. This was the rally-based rally demand, kind of already been used up. So we may go as low, because remember that 4-hour zone wasn't great. This is a little bit better right here on the 60-minute, 46.73 for a bounce. That may be our bouncing point. I believe that's also going to be about a Fibonacci retracement. I think it's 61.8 retracement. Yep, look at that, 61.8. I thought so. You get to eyeball those things if you do this long enough. So I would see that if we do pull back, that would be a great opportunity to buy in to see us rally back up towards that 4,800 target on the 60-minute time frame. So I'm going to go ahead and change the template back and remove this. There we go. And we could drop down to the smaller time frame to see if there's anything else, but really that 60-minute looks pretty good as far as opportunities. If we have the divergence, we pull back, you look to buy at the 46.73. If we go down to the 15-minute time frame, let me go ahead and clean this up. And we do have a little bit higher demand here as well. In the meantime, you know, like I said, if you're day trading, you might be able to keep an eye out on this 4,700. If we just overshoot it a little bit, there's demand right there, drop-based rally. Could cause us to pop up before we come down. Additionally, on the 15-minute time frame, there is this as a zone just above the 60-minute. There's actually two zones inside that 60-minute zone. The first one is 46.76. The second one is that 46.70 to 46.61. So I'd keep an eye out on these, on the pullbacks, but overall you got to be bullish. The market is diverging, yes. Again, you see the higher highs in price not being followed through when it comes to the indicator down below. That's divergence, and that usually leads to pullbacks in price. We've already experienced a little bit of that, but if we experience more in that pullback, that's where we're likely to bounce. So you're looking for opportunities to buy. The trend doesn't look like it's going to be reversing anytime soon, so you want to be a bull. Going to the NASDAQ. Again, start off in the big picture and work our way down. And we saw a massive divergence here. You can see how the price, clean this up. Prices were making new highs, and the indicator was not having any of it. So that's why we kind of went installed and went sideways. You can see we've just been getting mixed red and green for Christmas, right? So we're getting that sideways price action, just weakness altogether in the markets. So now we can drop down into the daily time frame to see a little bit more what's going on here, and you can see that we've got a lot of weakness. Just like the S&P, the NASDAQ can't seem to make highs that go above 60 in the RSI, and it also isn't going below 40 either on the moves down. So that's suggesting we're not bearish or bullish, we're just sideways in momentum, and that's what we're seeing, just sideways motion in price action. So we're kind of waiting for a catalyst, I suppose, to propel us either higher or lower. And this is not the leader. So since we're near the top of the range right now, we may end up seeing a bit of a pullback here. We can go into a smaller time frame to get an idea of where that pullback might occur. And, well, we're not seeing any weakness. And we're not at supply right now. We're just at the top of the range. If I pull this back a little bit, you can see the top of the range. We've pulled back from this area multiple times. This is the most momentum we've had, though, as we've approached this high. That suggests that we might be able to continue. There is a demand zone should we pull back, but I'm not seeing any weakness yet on the NASDAQ. Interesting enough, you got little rally base rally. I think that works. If not, really, it's kind of, I don't know. Yeah, it does close higher. Okay, so we are good. So basically, it's rally base rally, and there's another zone just below right here, as you can see. So if we do fall back, there's plenty to hold us up and push us back upwards, but there's no weakness being shown right now. We've made new highs and we're not showing really any kind of weakness. Might just get a small pullback here. You can probably go down to the 60-minute time frame. I just hit the wrong number. 60, let's try that. And on the 60, it's really not showing anything different. It's a lot of basing here. This doesn't really work very well as a zone. It worked on the 4-hour, but not really on the 60-minute. And I guess our demand zone on the 60 would be just a little bit lower here. If that 4-hour, again, the 4-hour wasn't a great zone anyway. This is definitely better. And yeah, well, that may be where we pull back to if we get a pullback. But again, I'm not seeing weakness. But this may still get dragged down by the other markets. Remember, it's not the leader either. So if the leading markets pull us back, then this one's just going to go with it no matter what. You go down to the 15-minute time frame, and there's actually a demand zone much higher here that if we do get a pullback, I'd be looking at this for a possible buying opportunity at the 16,274, 16,246. You have rally, base, rally. It might be two basing candles. Let's check. And we have a high 264.75. And we closed above that. Nope, so that's your leg candle, one base, and then the rally right there. So that's where you'd be looking for the pullback to. If that fails, it does have another demand zone a little bit lower. But like I said, we're not really seeing too much weakness on the NASDAQ compared to the other markets. Except now we see a bit of divergence. Prices try to spike up for a new high. We don't have that momentum. So that's why we end up pulling back more. But yeah, this looks like maybe as we pull back, we did a pause halfway before we moved down into the 274 area. I would look for this as a great buying opportunity. And as far as where we go from here, let's take a look at the 60-minute. I would suggest using the Fibonacci extensions to project possible targets. If we bounce off this 274 area, now you've got potential targets here at 16,388 and then 16,459 off the bounce of 274. So that's what I'll be looking for on Sunday going into Monday. Lastly, we can go to the Dow. And we'll again clean up everything, start off in the big picture. There we go on the weekly chart. Oops. There we go for my RSI, and we see that we've lost a lot of momentum as we couldn't even make a new high. So we tried to rally up and found a lower high, some weakness. Really, that's weekly supply. So it's not really a surprise that we ran into a supply zone, rally, base, drop. There you are, falling back. Now, as we fell back, we didn't really go down below 40, so we don't see any kind of bearish momentum here. This is suggesting either sideways motion or pausing before we rally. Dropping to the daily time frame, we came down from that weekly supply into a daily demand and bounced from the demand zone nicely, staying above 40. That's bullish. So that means that we should, on this current move up, take out the prior high. Even though this is maybe a little bit of supply we're running into, it doesn't look like it's going to hold, and we should be able to break to new highs. So I don't have any overhead supply, which means that as we're moving up right now, we have this rally, this pullback. Well, we've hit the 61.8% projection, but if we do not pull back, if we continue to go higher, then our target is 36,785, which would be the next extension. So if we do get a pullback, again, I'm looking to buy here. This is still showing a lot of bullish activity and no weakness. Other than maybe, on the daily, we can't seem to get above 60. As you notice, the last 1, 2, 3, 4 highs, we can't get above 60 on the RSI. That itself is bearish, but it's not going below 40 either, so that means it's not looking like we're going to turn down. It looks like we might just go sideways. So if we drop down from the daily to the 4-hour time frame, let's see what's going on there. And we're running into a little bit of selling pressure here. A little bit of basing and selling pressure. We actually went higher, but you can see how we hit the Fibonacci extension exactly. If we do pull back, there's plenty of buying opportunities along the way, it looks like. Let's see, high here is 662. We got a close of 663, so that's above. So that's your zone, rally base rally. That's the nearest one. Then you've got this. I'll probably put it there. Rally, 1, 2, 3, 4 basing, and then the rally. And then, of course, below that, another one. So this would have a very tough time moving down because it would run into a lot of demand zones along the way. Easiest path is for it to go up where there's no overhead supply. And we have good momentum. So as long as the momentum stays, you can see that we've got kind of a trend line forming here. Although, we can't say it's a trend line. It's not 3 touches. Whoops, my bad. So it looks like we still got bullish momentum. I go down to the 60-minute time frame on the Dow, and again, we're finding that we've got buying pressure. This one's a little too long to work as a good demand zone here. But again, it was on the 4 hours time frame as a good zone. Even on this time frame, there's another zone just a little bit lower, but you have rally, base, base, and rally as well. Not really much up here, though. So just kind of keep an eye on it, and we can go down to the 15-minute to see if there's anything there. And there actually is much, much closer. This looks a lot like what we saw on the NASDAQ, where you have this rally, base, rally right there as demand at 35,725 to 35,693. I go back to the 60-minute time frame to project, and really our uninterrupted move kind of came from here, impulsed up. You could measure just that last little impulse, but I'm thinking right here, if we pull back to 725, that gives us some overhead targets of 35,989, 36,152. So again, I still think we're very, very bullish. Could reach all the way up to that 100% duplication of the previous move, which takes you about 787, 36,787. Call it a Dreamliner target, right? Anyway, so we've got this demand zone here at 35,725, 36,693, 35,693. And if we could possibly pull back into that area looking for bullishness, we want to be above 50, if not at least above 40 on the RSI, and then target 35, basically just under 36,000. And then, of course, if it keeps going, we've got the other targets overhead above. So that's kind of what I'm seeing on the equity markets. If you got any questions, let me know. Hopefully you enjoyed the video. If you did, please click on subscribe and like to let me know you like the video and get to be notified for new ones coming out. And I will be producing some more videos for you every single week going forward. So let me know if you got any questions. Until next time, trade safe, trade well, and take care, everybody. Happy holidays.